radio for a really great future. We're talking real money.
We have a special announcement. Before we resume our regularly scheduled programming, we want to announce that once again, we are leaving the radio. We are going off the radio and moving entirely to podcasts. Now, the radio show becomes a podcast, but we're going to stop doing the Saturday radio show. So all of you who listen to the Saturday radio show, you need to become podcast listeners. And we hope you'll join us at talkingrealmoney.com or on your favorite podcast app. And now I'm going to do something that I don't think I've ever done in the history of Talking Real Money, the radio
it's really
show.
Saying something. Sure.
And that is to move a caller ahead of our main topic for the day.
That is shocking. What, you got to put Ray back on to sell a few more used cars? Is that the deal?
No, I was honestly expecting this call on the final show. But it came in just now, and since it's from a woman named Debbie, who I believe is my wife,
I see.
need to move her to the front of the queue because she gets special privileges.
I think she should.
Hi, Deb.
She's dealt with all this for years.
Hi there.
Hey.
Yeah, it's Debbie. Yeah, it's her. I
Hey,
recognize
Tom.
the voice.
Hi, Don.
Hey.
I know.
Yes.
I don't do this for a living, so if this doesn't come across, I'm sorry. But I just wanted to thank everyone. Good afternoon. I'm Debbie, Don's wife, as you said. And with the radio show ending, I just wanted to take a moment to express my sincere gratitude. Over the years, these two have broadcast not only from radio studios, but from their homes, a Disney ship, PBS studios, cell phones, and undisclosed locations, from an Airstream, airports, hotel lobbies, a bridal suite, and yes, even Tom's laundry room. Over 1,924 Saturdays, Don has been on the air live, and yes, 800 of those have been with Tom. Their friendship is resilient, has survived bad jokes, and has proved to be legendary. To the listeners of the radio show who have allowed Tom and Don into your cars, your homes, to your lives, your trust is the highest compliment they could receive. Watching this journey has been an honor and a privilege. Congratulations, you both, on 16 years, and to all the Talking Real Money podcast ahead. I will miss the radio show, the live show, but just wanted to say thank you. Thank you for your honesty, integrity, and for being the voice of reason that listeners truly deserve. Don't worry, I'm almost done. Over these 16 years on the air together and 35 years of friendship, I've had a front row seat to something truly rare. I've seen the daily phone calls, the tireless dedication, and the way these two have been the voices of honesty in an industry that isn't always honest. You've shown us that a great business is built on trust, but a life is built on friendship. You've made us smarter, you've made us more secure, and you've made us all so incredibly proud. So I just wanted to say thank you. I'm a little teary, but I appreciate everything you both have done, and I hope the listeners will continue on with your podcast. I'm sure they will.
You're a better writer than I am.
Somebody who doesn't do this, you did it pretty well. I got it. Part one. That's part one. Part two is, frankly, when you thank you for being so thoughtful about it. I mean, it makes me emotional because this has been a labor of love.
It makes him emotional
truly.
only because he forgot all of that stuff. It's like, I remember that now.
The laundry room.
The laundry room.
The bridal suite. Sure, that brings back some memories. No, Debbie and Don.
And you. Our bridal suite.
Okay, so I make sure I'm clear on that. The people who have been around know that my relationship with Debbie and Don is far more than a business relationship. The friendship is
huge.
Awesome.
Yes.
It's huge.
Yeah.
It's really, and she, as you said, been through a lot. Couple wives, kids, grandkids.
Since I've known you, I've only had one. So I just want to make that clear. Debbie's been the one for as long as I've known you.
That's a good point.
All right.
Debbie, you're a doll. You know that. It was great to have you out, by the way. Enjoyed seeing you. And no, thank you for all that. You know, it'd be great if you could call the other. And by the way, for people who don't know, I have two Dons in my life, neither of who have ever seen the Don. I might point out.
We don't get up early.
And Don
what's funny is that I'm a lot like his wife and he's a lot like my wife. It's weird. And it's kind of a good thing, I think, that we didn't marry the opposite spouses or nothing would ever get accomplished on one side
right.
and way too many fights would happen on the other side.
I think
most likely, yeah.
Debbie should call the other Don and tell her that I'm not going to be doing the show anymore because she'll probably say, "You did a show?" She'll probably be surprised or something. She won't know. So anyway. Be nice.
Debbie actually
love
listens.
You, really,
Thanks,
truly. And it's awesome. Wow.
We appreciate it.
Thank you both.
Are you getting groceries?
Have a good rest of the show.
Are you getting groceries?
Rotisserie chicken for dinner. Rotisserie chicken would be nice for
Chicken
dinner.
Ray.
Oh, yeah. You know,
Okay,
if you
I'll
could go
do
by
that.
Costco and get one of those big fat rotisserie chickens.
Oh, I love those things.
are
Yeah, maybe
good,
two. One for
Thanks
each
for
of
the
those.
call.
You guys. Bye, you guys. Have a
Bye.
good rest of the show. Take care.
All right, we're going to actually get to the real show in just a moment. And the real topic is, can you predict a crash? We're going to share with you, coming up in just a couple of minutes, those folks, these amazing, incredible, insightful individuals who have predicted 25 of the last 2 market crashes.
Say that again.
They've predicted 25 of the last 2 market crashes.
Think about that just for a moment, if you would.
That's the headline I
It's a
want
great
to
saying,
leave you with.
It's a great headline.
And we have some really interesting numbers that we want to share with you about these amazing, amazing individuals, massive skills at scaring the living daylights out of people, because that is their greatest talent, I've determined. And in the meantime,
notice one thing, by the
Yes.
way, about that? One thing is no one calls us and asks us anymore.
we don't know.
No one, and none of our clients ask us. They used to in the old days, and nobody does that because they know we don't know.
In the meantime, you can call us, and Debbie won't go ahead of you, at 855-935-TALK, 855-935-8255.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Now, I use Apple News. I get a lot of my news from Apple News. Now, Apple News knows that I'm interested in financial news, so it feeds me financial stories all the time. And over the past few days, I have gotten these stories fed into my news feed. This one started. This one is from these are all from a clickbait publication called MoneyWise. And here's one from 5 days ago. Let me just go 3 days ago. I'll go just 3 days back. Robert Kiyosaki warns biggest stock market plunge still coming and now imminent. Or wait, 21 hours ago. Kiyosaki warns, quote, biggest stock market crash in history arrives now, and boomer savings will be wiped out. How about just 4 hours ago?
Busy man.
Robert Kiyosaki warned a Great Depression is coming. Now, how has Robert Kiyosaki been when it comes to predicting markets? Because those are pretty scary, aren't they, Tom?
He's been prevalent. We can say that. Regular.
I decided to just go back 15 years, just 15, to see how his predictions have held up. Because he makes them all the time. In 2011, 15 years ago, Bob Kiyosaki said, quote, a major financial collapse is coming, unquote. What happened over the next 3 years?
I don't remember a major collapse.
The S&P 500 gained 70% over the next 3 years.
I guess it depends on your definition of collapse then.
It's a backward collapse. Maybe it's...
Oh, I see. It's a fold up. It pops up. Sure.
In 2013, he doubled down. He said, okay, all right, maybe we didn't get the major financial collapse, but we're going to get, quote, the biggest stock market crash in history over the next couple of years. How did the market do over the next 5 years?
I'm assuming it made money. That's my recollection.
90%. Almost doubled over the next 5 years. 5-year bull market. How about 2018? Massive crash coming. Next 3 years? Up 95%.
I'm getting a message here.
April 2020. The crash has only just begun. This was the COVID era.
It's only just begun. Yeah.
In the next year.
No, I mean, the next 6 months, by late in fall, the market had completely rebounded from the downturn of the spring.
And from April 2020 to April 2021, a year after his call, the S&P 500 rose 53% in 1 year.
So he was late to 2020. I mean, look at COVID. It's going to be crazy. Now it's all
begun.
over. Yeah.
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 And
when it already had gone
2023 said the biggest crash was coming. Two great years. The fact is, he and Harry Dent, he's another one of them, who have correctly predicted about 25 of the last 2 market crashes.
And by the way, Robert Kiyosaki tells you to do what?
Buy metals, often silver and commodities.
Okay. Yeah.
Over and over again, things that have not done well.
Yeah. Lately,
Except
last
recently.
year.
Oh, yeah. And please don't give me the metals argument. Yeah. I hear people saying lately, gold. Oh, gold. Boy, it's been a great investment. It's actually returned above inflation. I'm sorry, but for the 40 years prior to 2024, it did not even match inflation. So,
and smart people, Warren Buffett included, have pointed it out very clearly. Not a good investment, using air quotes here.
Yeah. I mean, here's the thing. Predicting crashes is so easy, and it gets you a lot of publicity.
Sure.
Predicting them every year until one eventually happens, well, that's even easier.
Well, and why, I got to say, with Kiyosaki, I do not understand why he gets so much, why people read his books. I mean,
I don't
get
it. I do not get it.
Because his real estate, we interviewed a member on Sound Investing.
Yeah, I do, and it was.
I interviewed him on the
TV
show
interview.
too. I remember chatting with him about these things. Yeah.
Anyway, so here's my plan. I am getting ready to create. No, I'm not going to do it.
Everything
I'm
in
not
your
going to put it
backyard?
on the radio because it annoys your ears every time I do it. But anyway, I've developed a special alarm sound that's really scary and frightening. You'll know it when you hear it. I'm not going to play it now because it hurts everybody's ears, because it's so important that it's like that emergency broadcast network sound.
Oh,
it's worse than that. Yeah. Worse than that. Because I am going to play it the minute Robert Kiyosaki predicts the greatest bull market in history. When he does that,
you can put the buzzer away.
When he does that,
that will be the
your
time.
Sign to sell everything.
He's a great contrarian, is what you're saying. As soon as he says one thing, you got to do the opposite.
He's the perfect contra indicator.
Okay. He's never predicted a bull market.
I know.
Has he? He's always said it's going down, down.
I want to find out.
I don't know that he ever has. And by the way, he also, we mentioned he promotes metals. I think he promotes cryptocurrency, and
he predicts whatever's going to get him in the press.
He'd suggest you invest in.
He is a press hound.
He's good at it. Yeah.
No, he's been bullish on gold. He's been bullish on silver. He's been bullish on real estate. He's been bullish on Bitcoin.
Okay, I knew it was crypto. Yeah.
In fact, he tells his followers to avoid stocks and other paper assets.
Yeah, which have just done horribly the last 20 years. Those paper assets. Awful.
Yeah. So that's what I'm saying. That is my contraindicator. And I need you to listen for it on every podcast. The minute you hear it, it's time to sell everything, because we know that Robert Kiyosaki is never right about the direction
we're picking
of the
on him,
market.
But there's a ton of, there's just a guy from the Bank of America.
Harry Dent's the other one.
Yeah, I sent you the quote from the guy at Bank of America this week that he thinks it's 2008 all over again because of oil prices going up, and combine that with the private credit crisis. This is it, man. It's all over.
It may be, just like Kiyosaki was, I'm sure, right one of those times for about 15 minutes. It's just, what do you do with that knowledge? 855-935-TALK. Call us.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
This is the show that really does try to help you manage money better than pretty much any of them on the radio and most of the podcasts to boot. And again, program note, we will be ending the radio show on Northwest News Radio in... This is
3 weeks from today.
3 weeks from today. So two more shows after today. But we will have 5 podcasts a week for you on every major podcast service, easy to find, or go to talkingrealmoney.com. Right now, you can call us. Actually, anytime you can call us at 855-935-TALK, 855-935-8255. Let's go to Louisiana. And Jake, you're on the show. Welcome.
Hey, hello, Don and Tom. I'm going to miss you guys, including Roxy. Thank you for everything you guys have done and will continue to do with the podcast. But I have a question. So I've had a few emergencies, car repairs, home repairs, kind of deplenished my emergency account. So I'm maxing out my 403 with the catch-up after 50, maxing out the Roth IRA. Got about $2K going into the brokerage. How do I replenish it? Do I just pull a chunk from the brokerage and just deposit, or do I stop contributing to the brokerage and put that money, gradually have it grow, the emergency account, rebuild it?
Oh, I see. So you need to.
He just needs to find the source for the money to replenish the emergency fund that has been used up for emergencies.
Yeah, well, you wouldn't want to take it out of your retirement account.
No.
Did I hear you saying that? That would be the last.
No, he was saying, should he take it out
place.
of the brokerage? He's contributing still, putting money in his brokerage account.
Yeah. Okay. Well, you'd stop doing that and start putting it in the emergency. But you could sell something in the brokerage account and move it to the emergency if you don't. But I don't think I'd do that unless I had an emergency. I mean, in other words, I wouldn't.
Right.
I wouldn't do it until I had to have the money.
The brokerage account becomes the emergency account. So
Exactly.
to replenish the emergency account, you stop putting money in something else, but not the retirement plan because of the tax advantages.
I'd keep doing that, and then I would, if you had cash, put it in that emergency savings, and save it in there. And then you just, as Don correctly points out, if something comes up and you have to have the money, then you sell something in the brokerage account, pay yourself with that.
In the interim, yeah. But so stop putting money into the brokerage account. Just start putting that into your emergency money. And if you have an emergency before you built up enough emergency money, because the reason for the emergency money is to keep you from selling in a bad situation when the market is way down. For example, if your brokerage account was all stocks and it went down 50%, we'd rather you not be forced to sell it at that worst moment.
Well, that's a good point, by the way. So maybe there's a little bit to do now, because if the market did go down, what is your stock to bond ratio in the taxable brokerage account?
Well, I'm 80-20, but I'm 80-20 because I have a pension when I retire in a couple of years that will take care of all of my living expenses.
Yeah, even then, though, because that's an aggressive position going into retirement, now that changes the formula a little bit.
Exactly.
I might over the next, and again, tax plan this. Carefully tax plan it. If you have some losses, some individual losses, which you probably don't, but if you do, take those first, and then take it out slowly enough that you don't bracket creep.
Okay.
But yeah, I would take some out of the brokerage too to replenish.
Yeah, now that I think it through,
if we had a big downturn, we don't want you selling your brokerage account. Yeah.
And you probably wouldn't want to be selling bonds anyway if you only have 20% of the portfolio in fixed income. That would be even worse, I think.
Yeah.
So.
Right. Okay. All right. I got another question.
Sure.
Oh, yeah.
How are you guys going to really engage with the people in the podcast? Because on the radio show, you can ask additional questions. You can drill down. You can ask them, what's the reason for the money? What's the purpose of the money?
Sure.
How are you going to do that with the podcast?
We have it covered. I spent almost all day yesterday setting up a new system here in the studio. I control everything here in my studio. I have like 5 screens.
Oh, yeah. I meant to ask you, what time can I have dinner tonight since you're in control? And what am I having?
I'm in control of the show, but I'm not in control of your life, thank God.
Checking.
Anyway, here's what we're going to do.
Yeah.
The phone number, 855-935-TALK, that is our phone number. That belongs to Talking Real Money. So what we were going to encourage listeners to do is call that number or go to talkingrealmoney.com and tell us when we can call you. This is the way Car Talk. You ever listen to Car Talk on NPR?
Oh, yeah.
It sounded like they were taking calls live, right?
Yes.
They weren't. They were recording those.
But they engage with people. The whole idea is here we can solve a
People would
conversation.
call their toll-free number, and then a producer would call them back, and they would put them on with the host, and they would have a conversation. That's what we are going to do. We're going to do it for sure. We're going to take those calls on Mondays and Wednesdays at 11 a.m. Eastern Time. And then we may do it a few other days just to get folks that aren't able to be with us then. So we're going to have this interaction still because we love the interaction. So I wired everything up and got this whole system set up so that we can do that coming up, actually starting next week.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Hey there, welcome back to the show. I'm Don McDonald, and we're here to make you a better investor, a better saver, a better spender, a better money manager. And you can get some help from us at 855-935-TALK, 855-935-8255. It's free, it's easy, and you'll be able to do it even after the radio show is gone.
I'm getting texts from people.
You are?
This is a little confusing.
Okay. What did
We're
I
not
do that
dying.
was confusing?
No, nothing. We're not dying. We're not quitting.
No, we're not.
We're not going to be on the radio anymore, but we're still going to be doing all the same things we do, but just on a podcast only. So go download the podcast. It's easy to do. As Don pointed out, even I could figure it out. If you have an iPhone,
even Tom did figure it
Thank
out.
you. There's a little, I think it's purple, right? You just push that on your iPhone and it goes, and we helped somebody do it on their other weird phone last week. Not the
flip phone guy. There was a guy with a flip phone.
That was pretty cool.
I didn't know people still had those.
But the other non-iPhone listener, we helped him download that.
Oh, yeah. The
Yeah,
Android phone that I did not know how to work.
But you made it happen. So it can be done. So we're not, again, and I appreciate the nice texts and people are saying, going to miss you. Not going anywhere.
Yeah.
Still doing it.
I know,
but just not
like
right
we're
here.
leaving. But
So,
the only reason we're doing this is so that in a few weeks when you go to the radio and you go, well, where are they?
Right.
You'll know that you need to go listen to the podcast.
Yeah, we're still around. So.
All right. So that out of the way, I want to share a little story with you.
Please.
I'm on a homeowners association board. A very, very big one. They call it an HOA on steroids. It's an HOA. Actually, I'm the president. And we have
You got the Marine Band playing that for you every day?
We have a lot of very intelligent Type A residents in our lovely community. Yeah. And we are a community. We have townhomes, we have condos, we have single-family homes, we have mansions, we have everything in between, apartments, the whole thing. We are very, very careful about our reserve funds, and we're very well funded for reserves.
Explain what that means.
Reserves are the monies that we have. For example, we own a lot of parks. The HOA owns a lot of parks, and if something happens, the pools deteriorate and we have to repair them, we take money from reserves so that we don't have to raise people's dues to pay for the repairs, to paint a building, to remodel, that kind of stuff.
The money's there to spend. It
comes out of reserves. It's like, there was all the controversy about condos not having enough reserves when that condo collapsed.
We went through that not long ago. Yeah, right.
Florida.
Sure.
So we have great reserves, but you can never make everybody happy in a community like ours. And we had one of our residents insist that we take some of the reserves for his townhome complex.
Yes.
And instead of investing those in CDs and treasuries, which are 100% safe and very liquid, that we instead put a sizable portion of those reserves into a unit investment trust.
Which is what now?
It's a kind of like a mutual fund.
How do you describe it?
It's kind of like a mutual fund. Yeah. It's a trust.
But it invests in other things, right?
Well, okay, what he was referring to are these buffered target outcome portfolios.
You heard me talk about these at retirement. I hate this product.
They claim that they can give you a 10% return with protected against a certain amount of downside. And the way they do it is with zero coupon bonds and option strategies where they're buying and selling options on either side.
Doesn't sound like us.
It's really, really, really incredibly complicated. And you might get a 10% return if the market returns 25%. Because you're giving up your upside to protect your downside.
Of course. Yeah.
They're very complicated. They're incredibly expensive. They cost, some of them I've looked at cost more than 1% per year.
I think on average they're about 7. Well, if you do the exchange traded fund version of this, you're looking at about 70 basis points. Pretty expendy.
Yeah. And the fact of the matter is they can lose money in a really horrible market. They're protected in a moderately down market. But they can make no money if the market doesn't do anything at all. If it's just like 0, 1, 2, 3, they don't make any money at all.
You don't get 10%.
You don't get 10%. You only get 10% if the market goes way up, and you don't lose if it goes down. But if it goes way down, you lose. So these things aren't magical. They're dangerous. And here's the problem I have with them, Tom. you don't know what you don't know. You don't know how these things will react until it's already happened. And the perfect example is what was 2008 with collateralized debt obligations.
Yeah.
And nobody realized that all of these tranches that were protected, well, if all the market makers vanish like Lehman Brothers, they went broke, then nobody is going to give you any money for your shares.
So you're not taking any of the money and putting it into this, I'm taking from this conversation.
No, I made it real clear that would never. He was so funny, too. He says, well, maybe you should get a financial advisor on the board.
Just a minute.
Dude.
Let me check.
And I wanted to do one of these.
Well,
I wanted to do one of these. You know how the obnoxious rich people in like a restaurant or something, do you know who I am?
Yeah. Yes, I watch Schitt's Creek, too, so I understand.
I so wanted to do that, but of course I didn't.
Well, but this is so important, that if you want something that's guaranteed, right?
Mm-hmm. Yeah,
no
and that's
risk of
basically
loss.
what he's saying is they guarantee 10%.
I know. You can't guarantee 10%. What can you, in today's world, what rate of return can you get guaranteed? Always know you're going to get your money back.
4%.
It's 4%.
It's 4%.
Yeah. And so there was a case that we talked about on the program a couple of years ago called Yield Wealth that promised guaranteed annual returns of 10.5, 15%, or even more. And that was discovered to be a Ponzi scheme. $50 million gone. Government finally convicted a guy named Paul Regan to 3 felony charges. I mean, so.
Well, he pleaded guilty.
Pay attention. You're right. Pardon me. He did plead guilty because he knew
he was in trouble. It was a Ponzi scheme.
Yeah.
Now, we're not saying these other things are Ponzi schemes.
No, 4% is what you're going to get guaranteed. That's what you need to know.
That's right. Hey, you want to talk about the great investment you've heard about? Call us, 855-935-TALK.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Here's something that might help you put all of these gimmicks and gadgets and gizmos and complex strategies in perspective. As we mentioned, the safe rate of return on investments is today about 4%.
That guaranteed to get your money back.
Guaranteed.
Secured by the U.S. government
or an arm
FDIC.
of the U.S. government.
Yeah, exactly.
So let's just think about this and let's put on our little logical caps, shall we? Let's use that logical
In
brain
an illogical
of ours. I know
world,
it's so
sure,
hard
yeah.
for you,
Yeah,
but let's
pretty
use
much.
our logical brain for a moment. I don't even have to get into the details. If we just use our little logical brain together, can we do that? All right, here we go. Let's put on our logic.
God, I'm going to miss Saturdays. Sure. Okay.
We do this on the regular podcast.
I'm kidding. Yeah. Okay. What do you got?
Ready? Are you
Yes.
ready? Here we
Please.
go, boys and girls. Okay. If there was a magical 10% absolutely safe, you weren't going to lose any money rate, why would anybody buy a 4% CD or bond?
Or why would they invest in stocks? I wouldn't.
Right.
If my client's money, I'd be give me my 10%. See ya.
The reason is because they're not going to do that. They can't guarantee those kinds of returns. It's just not possible. And I want you to understand something. I hope most of you have been around long enough to realize that people lie.
Because they want your money.
People lie a lot about money. A lot. That nice person at church, probably lying about money. Money.
Wait, which nice person?
The one who works for that brokerage firm.
Okay. Well, sure, not the guy up in front. Okay.
No, not that guy. Well, could be. Well, it depends on which church you go to.
Oh, God's sake. This is really getting ugly, man.
All right.
I'll tell you what. Okay. Thank you, though. Point well made.
Just wanted to make it. Do you have any points you'd like to make?
No, but I have questions and comments. from
Wait,
people.
you have questions or comments? Do you have questions?
Both.
You have both?
I've been getting a lot of comments last couple hours about RetireMeet, which was last Saturday. And thank you all who came out and joined us. It's really nice to see.
Yeah, it was nice to see all those
350
folks.
people. Yeah, I love it. So you know that. But here's another one. Just came in from Snohomish, Washington. Terry
Yeah.
writes.
This just came in, didn't it? Because it's on your phone.
I know. I didn't. My war on trees has been. I hope you're not going to get mad when you hear this. It says, first of all, Starbucks laughed me out of the store when I gave them Tom's card for my free latte. Do you know the reference?
No, I have no clue.
I knew you wouldn't. So a lot of times when people come in and have an in-office meeting, I give them my business card, kind of an old thing, kind of old-fashioned. And I tell them, hey, this card is good for a free latte at participating Starbucks. Which is, it's two parts. It's meant to elicit a laugh, but also see if people are paying attention. Like, what? Most people laugh because that's silly.
They got the word participating.
Thank you. Many, however,
so, wait a minute. Let me just clarify that for some of our audience, not many, just a couple. No Starbucks actually participate in this plan.
No,
there. All right.
Sorry. No one
No one participates.
McDonald's it used to be McDonald's, but then that was
I don't participate in the plan. I have a coffee maker downstairs, and no, I will not give you a coffee for Tom's card.
Says then to the serious part, looking for an estate planning attorney in Snohomish, Everett, or East Side. Wondering if you have one you can give us some recommendations. I do. I'm going to give it off air because Kanoa Ostrom's a guy that spoke at RetireMeet, did a wonderful job. He's my guy, but he's not on the East Side. He's in Seattle.
So you know somebody on the East Side?
This person. Oh yeah. I'll write.
Can you find me somebody in Celebration, Florida, please?
No, I can't. But that's something we're not going to talk about that either. But all right. And I better be in there somewhere, considering all the abuse I've taken.
Not going to happen because I saw yours and I'm not there.
I saw yours. Wait a minute. What kind of show is this?
You show me yours. I'll show you mine.
All right. I got one.
God, that sounds horrible.
I know. Okay. I'm going to let you say that. Gene from Kenmore.
Estate plan, folks. Estate plan.
Thank you.
You naughty minds.
Gene from Kenmore writes, hello, I enjoyed RetireMeet 2026.
Did he say it like that?
Deal. Hello, something like that. Sorry. Yeah. It appeared the meeting may have been recorded. Yes, the meeting was recorded. RetireMeet was recorded.
Yeah, it was recorded, yeah.
Can I pay a fee to access RetireMeet 2026 offerings and share with my brother who lives out of state? Thank you, Gene.
I don't think you have to pay.
No, it'll be
on YouTube eventually, right?
Yeah, just guessing. Probably a month.
Yeah, that's what I heard, because there's a lot of editing that needs to be done.
Yeah, each presentation gets up there individually, and you know the one that was downloaded the most last year, of course.
Mine, of course.
No, mine.
Oh,
sorry. I hate to be the one to break that to you. By the way, they do a survey every year, and you and I were not in the top 3 speakers last year either.
We weren't in the top 3?
No, let's see. Joe Salciha was number 1. I know that. Maybe I was number 2. Anyway, we weren't first, to put it that way. But Gene, to your question, yes, because you don't have to pay at that point. And online, I think you had to pay $10 this year, and all that money went to a couple of folks that work on financial literacy. We didn't keep the money, but that will all be. We'll let you know. That will all be available. See, RetireMeet was March 7th. I'll say mid-April, something like that. It takes a bit of time to edit that and put it all up there. So. And there were some really great sessions.
Let's see. You had last year.
I can take my word for it.
You had 950 views. Wow, 950 on YouTube, where people get like millions.
Yes, I know.
Although I should talk, I only got 769. But I'm going to get more this year.
How's
the reason
that?
I know I'm going to get more this year is because my presentation was better this year. It wasn't that good last year.
Ladies and gentlemen,
No, I mean better than it was the year before.
The contest has been... Okay.
I didn't say better than yours.
Oh, okay.
I just said better.
That was implied.
We have lines open, as you can tell, 855-935-TALK.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Now, our audio podcast gets like 2 million downloads a year. So we have a lot of people who listen, a lot of downloads. For some reason, somebody convinced me a while ago, because it wasn't any extra work, there was some big benefit to taking the audio podcast and putting it up on YouTube.
There's a lot of people that used to tell us, I listen to podcasts on YouTube.
Yeah, well, not that many, because I'm looking right now.
You looked around and said, wait, no.
I mean, Friday's podcast has so far 9 views. 9
total, not 900.
Total.
Not 9,000.
Now, but the big winner this month, and this is why I mentioned this, I was just looking at this, is 91 views from a show last week.
Last week.
Yeah. Already 91 views, which sets like a new 1 week record. And that's the show with me interviewing Joe Saul Sehi. And I think it's because of the cover picture, because that's the cover picture where he looks like he's trying to kiss me on the cheek.
It did appear that way, yeah.
Yeah.
Do you want to comment on that now publicly?
No, are you kidding? I went, what's he thinking?
Okay. Maybe we need to get Joe on the phone.
Joe's a very
call him right now if you want.
No, let's not.
What that was all about. Okay.
The reason I mentioned the podcast is because not only can you listen to it on YouTube, you can listen to it on every podcast service known to mankind.
Every one.
And we're there 5 days a week if you're not listening to the podcast. And if you're not listening to the podcast, you need to start, because in 2 more weeks, there won't be a Saturday radio show. There'll just be podcasts, 5 of them still.
Easy to do. Listen when you like. Still having interaction, not obviously when you're listening to the podcast.
Well, when you're listening, you won't be able to tell the difference. True.
So, but we want to talk to you. We want to continue to make that part of the work that we do because we enjoy it. So
if you have questions, here's the way you do it. You go to talkingrealmoney.com. There's a contact form. You can ask a question there. You can record a question there, and those will go on the Friday podcast. Or you can call us at 855-935-TALK, and you'll hear what I ask you for. I ask you to leave some information, and we'll set up a call with you to get you on one of the podcasts where we can talk and actually have a conversation. So it's going to sound just like the radio show. It's going to work just like the radio show. It's just going to be pre-scheduled. So it'll sound great. It'll sound great.
What are you going to do with your first Saturday off?
I don't know. That's so far
over
away.
A decade. It's a couple of weeks.
I know what you're going to be doing. You're going to be in Arizona.
Thank gosh.
No, you know what we might do? We haven't gone to Disney on a Saturday in like decades. So maybe we'll use our annual passes and go to Disney. That'll be spring break. We'll wait a couple of weeks. Okay. Then we'll go.
Yeah. So anyway, take advantage of all those things. By the way, now I'm having more conversations with people as a result of RetireMeet, but still my favorite thing to do. So if you want to talk to Tom about your situation, you go to talkingrealmoney.com, click on
Meet an Advisor.
Just fill out the form and say, I want to meet with Tom. Happy to do it. I've really enjoyed that part of my life.
And if you don't want to meet with Tom, just don't put Tom down there, and you'll meet with somebody else who's probably younger.
Better looking,
probably even better trained.
On personal things?
On money.
My hair and stuff?
Are you kidding? Okay. Nobody's better trained on personal habits than you.
I said that might be a strong statement.
Personal hygiene.
I did notice, by the way, I was the only one wearing a tie of all the speakers last week.
You were the only one wearing a tie.
I went through the list and
you were the only one in a bespoke
suit.
Weird.
Yeah, it's kind of strange. Well, no, they had suits on, but the
did
open
they have
collar
suits,
look
or was it sport coats?
Yeah, no, most of them are suits.
Okay.
Pat Sweeney had a suit on, and Scott.
But you know what? We have to go. So go to talkingrealmoney.com and just check all our stuff out, okay?
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.